Welcome to the Berks Homes podcast, the business of building homes. I'm Katie, here with my brother Ben, and today we are talking about the 2026 home building market. Why are we asking about this? People ask us all the time.
Yeah, like we freaking know.
And that's the end of the podcast.
That was a joke, but not really. Yeah, we do get asked that a lot, like the crystal ball will come out where there's geopolitical, economic, and other things that happen that we can predict, and we just can't. But we do have ideas. We have a lot of ideas.
And I think what we like to clarify is why you opened with that. We actually don't know, but we can speak to the things that we do know.
Right.
We do know how to react if this or that happens.
Yeah.
We can anticipate, we're guessing this, but we have a backup plan for that.
Let's talk about what we do know.
Okay.
What we do know is the market is under attack by demographics, by numbers, affordability. Like we know the very clear pressure that we don't know the reasons why necessarily, but it's a lot of factors dating back to COVID when the market was artificially sped up.
Yeah.
Right. So money was cheap, and there was also a huge demand demographically with the age of the buying demographic and the availability of money, and people were getting raises at a record rate across industries. So that was going to slow down at some point. Yeah. Right. And unfortunately, I say unfortunately because it's generally not a great thing when affordability is low. It just means less people have access to houses.
Exactly.
And it's been basically since the end of 2022 when rates went up and costs never stop going up because they never do.
Right.
But they were already high due to the pandemic supply chain issues, and they never stopped going up. So it's been almost 3 years of the affordability piece being a real challenge. Exactly. Especially in some markets.
Right.
So we know those things.
Yes.
So this year was, at least for us, the only reason that our sales numbers were down, really, in my opinion.
Down from what we predicted.
Yeah. Was due to some of our projects not coming on in time.
Oh, we can tie those numbers out. It's an exact science at this point. That
right.
The delay in opening for sales in a few communities that we expected to open this year ties out to the gap.
Yeah. So I don't know if it's just we're doing a great job in selling the homes we have available, which I do think we've done a great job. But I also think Pennsylvania is a little different.
Well, the markets that we're in, which is, call back to our strategy is we pick the markets we're in for a really good reason, that they might not be the hottest, but they are pretty predictable. Right. And we like that.
Yeah. So I think when you compare where we're at the numbers nationally, we're in a better spot.
Yes.
Moving forward. So all those things we know, which equals unpredictability for next year. Yeah. And I read a lot of industry specific news and stuff, but I try not to pay attention to like the holistic commentary of the market at large.
Right.
You just take the factors that affect you.
Exactly. What's one in coming to mind when you're saying that?
Well, I read a statistic this morning, one of the charts that I pay attention to, which is like prices over a period of time. So usually like year over year. And the last 2 quarters, it was the lowest, the biggest drop in percentage. So -4% and 5% compared to a year ago. Nationally. Nationally.
Oh, okay.
So you're talking about some double-digit metro areas that are really skewing it, though.
Yes.
Right? when you look at the chart since 2008, these are by far the worst numbers since 2008.
Mm-hmm. Now, are we freaking out about that? Absolutely not.
If anything, I mean, I don't know if our market's even flat.
Right.
It's up.
Mm-hmm.
So you got to be careful.
When you're looking
at trends and everything, you have to be where you're at.
Well, that's why we're talking about what it means for us.
Mm-hmm.
And did I clarify that?
Yeah, what it means for us.
What it means for
year.
us, 2026, not Austin, Texas.
Right. So where do you want to start? Those are the things we know. I just wanted to set the table for things that we know and don't know.
Well, adding on to that is we do know that demand is still there.
Mm-hmm.
That's
at a certain price.
Right. If we can find that sweet spot where people can afford it.
Yeah, I shouldn't say everything, that's a general statement. Many communities of ours are very price sensitive to the point of a $10,000 change up or down makes a big difference.
Yes.
So sweet spot is, and it's always evolving.
Yeah. Well, that plays into the timing. So, you could get halfway through a project and you'd have to adjust down where usually you would assume it would be up. It's just a matter of when it's that close, when it is that sensitive, it's a playing with that formula constantly.
Right. Yeah. Because sales in our business is very, very fluid, right? Because we're almost our own economists at the community level.
Yeah.
We don't want to sell 6 houses in a month.
Exactly. We can't provide the level of quality and service at that pace.
There's a number that's right for us. And when there are 6 ready, willing, and able buyers, that means our price is too low.
Right.
So then we go up. And then you go up, and then you're like, oh, that's too high.
Right.
And then you go down. And then you get some good momentum, then you go up. Too high, go down,
Yeah.
We adjust like that. It's interesting. There's been multiple communities where we are like, we're like, we can't go up $1.
Right.
Or it'll just stop.
Exactly.
It's just wild.
Well, that's part of this conversation and talking about knowns. We know that we will be playing with pricing all next year. We know that we will be able to hit that sweet spot multiple times throughout the year in every single community, but it's not ever something you can take your eye off of.
Right.
It is a work in progress constantly.
Right.
And I think that's something that people don't understand walking into this with, fresh eyes going, well, you said that you want your GP to be 23%. And why aren't you freaking out about it moving all over the place?
Yeah.
It's we know it's completely unpredictable.
Right.
Because of the volatility, and not in a bad way, but just the predictable way of the market. Yeah. So we're not.
Yeah, our job is to try to smooth out and make sense of what is a very, very volatile and picky and sensitive market.
Yeah, exactly.
And that's just the game that we play. And you just gotta, sometimes you win tremendously and sometimes you take an absolute beating.
Right.
And you don't always know why.
We like to try to figure it out, but it's not
you just
the end
don't
of the
always
world.
know. There's some situations. So we know the market segment that I think we both feel really strong about is that entry-level buyer and that first-time move-up buyer.
Yeah.
For our markets where we build.
Yeah.
And I don't see that changing.
Right. Exactly.
So we feel really confident in our ability to serve those 2 profiles of buyers.
Get them in an affordable
get them
house.
into a home that they can afford. So
we also get asked a lot about prices of materials. And, that is something that is just such a swing that you can take and say, oh yeah, they're, it's stabilized now, that it's not really too bad, but it's also like, don't even bother saying that.
Yeah, I think you can say the industry's become a little desensitized to larger price increases.
Mm-hmm.
Prior to COVID, a large price increase on an annual basis for a material would be like over 4%.
Right.
Now that's like, ooh, we got away with 4%.
Mm-hmm.
It was like double digits, which is insane.
Yeah.
You're really, a lot of times it's 1%.
Mm-hmm.
And you could at least almost write it down in pen.
Mm-hmm.
So yeah, I think people we're desensitized a little bit to that. Lumber is like super low right now.
To the point of being scary. And
scary.
We are expecting a backlash for that.
Yeah, so because we had these historic levels of home starts for, let's just call 5 years.
Yeah.
And you had the production that ramped up so much, and now you have mills that are actually like super slow and not busy and shutting down.
Right.
So right now in the winter, when starts are a little slower, that's okay. But when the demand, if it doesn't come back in mass in the spring, then you could see a spike, because now there's fewer suppliers for the lumber for the whole country, and who knows what tariffs do and all that stuff.
Right.
So it is scary because it's really challenging. Like I said, every dollar matters with the affordability, and nobody knows lumber is super low. Even though you see prices have gone up so much, all those other price increases kind of took over. If we would have lumber pricing that we had in 2021, I think we would all just be like, okay, sell your cars. I mean, it would be catastrophic for the industry. It just wouldn't happen. So
we're not predicting that happening next year by any stretch.
I'm not predicting it, but it's an interesting challenge that, we just keep pointing back to, we got to be ready for a challenge like that.
Yes.
Right. So we always talk about efficiency. How can we be prepared for, what appears to be an inevitability? Lumber's going to go up from here.
Yes.
If it's the lowest it's been since 2020, it's going to go back up.
Exactly.
Is it just going to be a couple points, or is it going to be like 10%?
Right.
And then you really got to find that money somewhere.
So are there places right now that we can be looking? That's just the natural exercise as we're kind of
constantly
looking at these things.
Constantly. But yeah, I mean, mortgage rates, we're not going to really pontificate about that.
No.
I think right now, I do have a story about how this all ties in. So we had a home at Siders that, is pretty decent sized spec, that we moved a buy down to this weekend.
Okay.
Sold immediately.
Really?
Got it to $499.
So it
was
incredible.
Immediate. It was immediate. We had it on another house, and we knew that one was better off just lowering the price a little bit to get some activity on it. And so this one we didn't want to touch. Matt did a great job, but immediate. I mean, right away, within hours. So that mortgage rate, the people that ended up going to contract were like, I can get that. Like, they didn't even know. And those are the things that we can do to make our product, in that spot that makes a lot of sense for people.
Yeah, it's because we talk about these things all the time, and the levers you can pull for mortgage rates and buy downs, and just so many different creative strategies. I always forget how undercover that information is half the time to just the general population.
Yeah.
Even though it's noise to us at this point because, we're looking at competitors. We're looking at what's happening in the industry. So that's just constantly in our face.
Right.
That we know new construction, you can get your mortgage rate down.
Right.
But that is not something that people know about. So when we're being asked for market information, for the future and things like that, I wouldn't even think to mention it.
Right.
That this is something that you could do today.
And it's not a very inexpensive sales strategy, but when you have rampant affordability issues in a market in any, the whole country, you either have a strategy or you don't. Like you're going to sell it or you're not. And if the price of the home is where only one singular buyer can acquire it in a market, then it's going to sit forever.
Yeah.
And so
you're going to lose money either in one way or the other.
Yeah.
You might as well have more, at bats.
Bites at the apple.
Yeah.
Yep. More at bats. So that was an interesting thing.
Yeah.
What do you expect like in our market? I'll ask your opinion. Once.
You mean what do I expect in our market
for
next year?
Yeah.
I don't see much changing.
Yeah.
I think that we will see pretty much the same as what we saw this year.
Yeah.
We are seeing people who still have the need for homes. There's not very many places for them to get a home in general, let alone, a new home.
Right.
So I don't see much changing in our pricing. In our sales prices, like I said, they're going to be moving around.
Right.
But not a lot. It's just within that tiny percentage of shifting up and down throughout the year so that we can find the people who can afford what we've got.
Right.
But I don't see a lot of movement unless something, extenuating circumstances.
Yeah.
Yeah.
I mean, jobs to me are like the 101, real estate 101 for dummies.
Yeah.
If there's a lot of jobs out there that generally people will buy houses.
Yeah.
So and that doesn't even mean that it can't shrink a little bit and still be fine, because the numbers have kind of been all over the last couple of years. Like unemployment's up a little bit, it goes back down. So it doesn't have a market like impact on the trends.
Yeah.
So unless something happens where people are very afraid and specifically business owners to not hire.
Yeah.
Or have, mass layoffs or something, like it is what it is.
Again, our markets specifically, not just Pennsylvania, but where we choose to build,
right?
The types of employees that build our homes are really stable.
Yeah. A lot of
professions.
A lot of nurses, teachers.
Yeah.
Doctors.
Local, community driven, not impacted by,
tech.
Exactly.
Yeah.
And if it is tech, it's more localized, so some of those big impact things that are happening more nationally we're a little insulated from it.
Yeah.
So I think our biggest stretch is, I think we took the biggest hit when when the rates went up so high. I think that working with people to get them where they need to be has been the magic formula for us since then. I don't see that changing. We're just working with each person to get them where they need to be to get in the house. It's not easy by any stretch.
But it's doable.
It's doable. It's not consistent. It's a different thing for every community buyer situation. But
yeah. I think the other thing that I would throw out there as a potential impact could be, as long as inflation doesn't continue to just go up and up and up and up.
Yeah.
Because those dollars are just, eating away at the margin for people.
Yeah.
So, I know insurance has kind of gone wild. Obviously, the cost of housing, cars. I mean, it's all like just in the background gone up and up and up. And at some point, like greater than the wages have gone up.
Yeah. Well, what's interesting too is the landscape of money earning potential has changed.
Yeah,
too.
That's true.
So
there's new industries.
There's new industries that were so young when things started increasing in cost. The cost of living has been increasing constantly, like you're saying. But those new industries were so new that we haven't seen the impact.
Right.
And I just feel like
what?
Well,
like AI. Yeah.
But not just that, more just online entrepreneurial type things where people can earn more money on the side. I think the side hustle has a life of its own at this point in a way that I have not seen in a long time.
That doesn't require like a significant amount of your time
or any type of investment. It's anyone can just kind of pick some stuff up on the side now. The cost of groceries has gone up an insane amount, but yet people are still using Instacart too.
Right.
So the
money's coming from somewhere.
Right. But you can earn money doing the Instacart.
Yeah.
Do you know what I'm saying? Like there's just different ways to supplement now, and I think
what you do on the weekends?
Spend money on Instacart. Yeah.
No, do the Instacart. No, you don't leave the house.
No,
on weekends.
That's exactly right. Once I'm sat, I'm sat.
Yeah.
Yeah, I just think it's interesting to see the shifting in opportunities and people's mindset about how to make some extra money to be able to afford what they want.
Yeah, I mean it's just I'm always shocked, every day. I'm just like,
you can make money from that?
Well, I just feel like the whole middle class is so big now. It's like everybody seems to be in the same group,
Yeah.
And it's always like you see these families and what they're doing and what they're spending money on, and you're just like, how'd you guys figure that out?
Do you have that money?
Yeah. It's like it's just kind of interesting. And we see it every day here.
Yeah.
It's always, but again, like sometimes it takes me like a good 24 months to catch up where it's like, oh, that is a normal mortgage payment.
Yeah.
You know? So it's like, hey, there's banks qualifying all these people and, oh, okay, they do have the amount of income that they should.
Yeah.
But it's still like when you add it all up, you can't do everything.
Yeah.
Right. And I think the millennials and the next generation, what is that? The
Gen Z.
Yeah. They're savvy.
Yeah.
Like they understand their numbers, if I'm generalizing here, but they understand it, and they don't mind taking a little bit of risk.
Yeah.
What's next here? Oh, I'll talk about land.
Oh,
so
please.
that is easily going to be one of the most interesting things to play out over the next, let's just say 18 to 24 months, because there's going to be less developers dipping their toes into the market with uncertainty. Because now if you're asking somebody to go buy a piece of land and entitle it, take 24 months to spend all this money and predict what prices are going to be after, let's just call it 25 of being like this and 26, who knows,
Yeah.
I just feel like there's going to be less opportunities for, these developers who have been making out pretty well the last few years.
Yeah. This is the time that they start going,
yeah,
I'm good for now.
Right. And so what happens in these kind of sideways markets is there's only one place to go with getting better pricing for the end buyer. It's the landowner.
Yeah.
And trust me, these landowners have 2021 on their brain.
Right.
These prices. So it takes a while for that to shift.
Yeah, that's
just like with buyers with new mortgage rates. You're going to go through a while. Like when mortgage rates go up, they're just going to wait.
I'll wait for a better offer, thanks.
Yeah, right. So I think that's going to be an interesting dynamic. And then, where we build, typically what happens when markets get soft, the big national builders will retreat a little bit and go back to their core. They'll go back to their big cities.
Yeah.
And kind of let us alone. And so for us, this is kind of like a good opportunity.
Yeah,
sometimes.
we're looking at this with anticipation.
Yeah, it's hard not to be excited about it.
Exactly. So not predicting it, but watching to see if it will happen so that we can take advantage, because we're constantly looking at this as when can we get our foot in the door?
Well, even the numbers don't have to change, but
opportunity.
But just the presence of a little fear, that's what gets me excited.
Yeah.
Because, then we can present ourselves as one of the only buyers in certain situations. So land will be really interesting to see if it, like, just the pace is terrible. It's so slow. It takes forever. To see if it slows down even more is just like a hard sentence to articulate. But
all of these factors, knowing all of these factors, we are putting a lot of time and energy into figuring this stuff out.
Yeah.
Because, this is a shifting aspect of the whole process right now. So this is something we're like, we could probably hack this in some way. We can fix some pieces of this process. We can come up with some creative ways to speed things up, maybe.
Yes. Yeah.
So let's do it.
And get yourself to the front of the line.
Yeah.
Going back to our tried and true, building relationships.
Yeah, exactly.
Building trust. That makes a huge difference. In times like these, when there is uncertainty, the logical thing is you're going to gravitate to something that you can trust.
Exactly.
And that's what,
we're trying to provide.
Yeah.
Yeah.
When the market's hot, we're just trying to keep our heads up, because we're just another builder.
Yeah.
When we compare ourselves to these giant conglomerates and stuff. When times get tough, that's our time.
Exactly. So we're excited about that.
If they do.
Yeah. But just keeping an eye out.
Yeah.
Do you think that, speaking of markets for next year, what the customer expectations are plays into that pretty heavily? Do you see that changing at all, or do you feel like that's going to be pretty consistent as well?
I think it's always about value. At the end of the day, no matter what, where you're at in the market pendulum, but obviously even more so when it is a potential buyer's market, right?
Yeah,
so
exactly.
We're all going to try and get our pricing to the same place. Yeah. But if you're differentiating yourself with fantastic product quality, all of that experience, you're gonna be the first one to sell a home. So I don't know that I see changes as much. I mean, affordability means a lot, but what happens is we have to provide them with what that looks like.
Yeah.
Because somebody will. So I think there for a while, a lot of people were sacrificing, maybe some aesthetic things to get the square footage.
Yeah.
Because affordability just got so tight. And there will still be some of that. Not everybody can just build a house for zero profit. Somebody's going to offer a deal.
Yeah, exactly.
A value.
Yeah.
Not a deal, but a value.
That resonates with that person.
Just that combination.
Yeah.
And, I certainly think that the market hasn't gotten less picky.
Right. I mean, that's the way that if I'm betting, I'm going to say it's going to lean on that side more than less picky. I could see a little more expectation of, I am putting this money out. So what do I get?
Fewer.
Yes.
If the market slides sideways or down. Yeah, it's always, that's the pendulum.
Exactly.
With fewer buyers, you have higher standards, as a buyer.
Yeah. And what's interesting too, and we've been saying this consistently for years now, is people want to be, guided through the process and educated a little bit more, especially with our demographic as first-time home buyers or move up. Maybe they just purchased a used home and then this is the first home that they're building.
Right.
The lack of information is just one of our biggest areas of opportunity.
Right.
Because we can make or break their experience building a house.
Right.
Is how we kind of prep them and communicate with them the whole way through.
Yeah.
So we can kind of set the expectation is what I'm trying to say.
Yeah.
It's a blank slate. So if we knock it out of the park, they're going to have, a really great experience with us.
There's a lot of buyers that will kindly let you know when you didn't hit the expectations.
Right. And then we learn from that feedback and apply it to the next one.
But the expectations thing is why this business is so fascinating and never boring at all is because every buyer has different expectations. You got to go figure that out.
Yeah.
Every time.
Yeah.
And right now it's going to be a challenge.
Right.
Like this is like the most, in terms of percentage, the most it's ever been percentage of their money.
Yes.
For a home. Like
yes.
Monthly. This is it right now.
No one in the history has spent more.
Yes.
In a generation.
Yeah.
Of what they make. Yeah.
So,
you're exactly right.
Yeah, it's gonna be a big deal.
I mean, that ties directly into, how that applies to what we can do about what we're predicting here, which we've predicted not much of anything except the same and some things to look out for. But what do we do with that? And it just ties so nicely into our goals. I really like the way that plays out.
Are you talking about Build with Care?
I am. I'm saying all of them, but starting with Build with Care, just what we were talking about is differentiating ourselves with that communication and experience.
Yeah, these are all controllable factors, right? So excellent quality. We have a lot of great systems to keep our strict standards, processes, systems on different checklists and inspections that we do internally outside of the required municipal ones. And then communication, customer experience, clean job site, all that stuff. These are all controllable things.
Exactly.
Because there's a lot of stuff that you can't control. And then, partnership development. So one of the biggest things that we can do to elevate the standard of the quality is really continue to develop our partnerships with our subcontractors.
Exactly.
The people that we ask to build our homes. And there's
translating what Build with Care means to us to them.
Yeah, and there's a million different ways to do that.
And you mentioned too partnership, like developing our partnerships with trade contractors is one, but also land partners. All of them play very nicely into this mortgage affordability.
Right.
That's our lending.
Yeah, getting
partners.
The right partners in there.
Yeah. I mean, it all ties together of kind of the sticking points of the industry next year. If they're similar to this year, we need to really all work together to, overcome any of those obstacles.
Product. Huge, right?
Yeah.
Because it's just the way it is. Some plans are much more attractive to the market than others. And then when you hit the real sweet spot is plans that people love that are just the most efficient, cost-effective ones.
Yep.
We love those where it's just that sweet spot of, oh, wow, this gets you the most bang for the buck. Yeah.
It's been so nice to see our plans that we had in mind a few years ago when we were developing them.
Yeah.
That they would hit those.
Right.
Hitting and climbing the charts of some of our most sold.
Most sold, yeah. It is great. I love that.
It's working.
It's working, yeah. So product is huge and just trying to, listen as much as possible. Listen to the market. Go be proactive. Try and understand what people are looking for, what they want, and kind of crafting your deal, crafting your offerings to what people want and what they're willing to pay for.
Well, that's why we talk about this. Yeah, we get asked a lot, so we want to just kind of speak to it. But also, we walk into a room assuming everybody understands that the market is something to work with, and we overgeneralize the term the market, but it is a factor. You have to take that into consideration first before you can decide what your strategy is going to be when it comes to making that deal when it comes to land, but then also with each individual customer, what you're going to offer. Yeah. We can look at something that's not working, okay, we decided that this is the plan lineup for this community. We predict everyone who wants a house in here is going to love this lineup.
You're going to get this lineup.
Right.
Yeah.
They will tell us if it was a dumb idea.
Yeah.
They will say,
zero sales.
Do you have a 1-story home?
Yeah.
And we have a lineup of only 2-story.
Yeah.
And then you get asked that 5 times and don't sell anything. You go, you know what we should do?
Yeah.
We should add a 1-story.
So we need to know going into that community if there's demand for, single-story homes.
Or we sell a bunch of 2-story and then it drops off and the market shifts and then everybody's asking. So are we listening? And what are we doing with the information? Our expectation is you hear that, you get it, catch a pattern, do something about it. We don't say that very often. That's
because it's obvious.
Well,
anyway,
to us, the thing is, what's important to take away from this conversation is we expect things to change.
Yeah.
We're going into this saying this could happen or that. Our expectation is that we will react appropriately when we understand what's happening.
Right. Yeah.
You know?
We are not manufacturing one product every day inside a factory.
Correct.
Yeah. The expectation is that it will change multiple times.
Correct. And we're totally cool with that.
So we can also control, speaking of factories, we can control the cycle time that we build in. And that will be a strict focus for us next year. So cost of capital is big right now, obviously, the last 3 or 4 years.
Yeah.
And every day you get back in efficiency goes straight to the bottom line in terms of your capital cost.
Protect and grow profit. The end.
What we can do. Yes.
Okay, so would you say that our market predictions for 2026 for us are realistic but optimistic?
Yeah. So
as always,
our business plan is set to grow from this year, but only due to increased opportunities.
Loss of opportunity from this year will play into the opportunities that we are getting next year.
So if we just had the same amount of opportunities as last year, communities, lots, I would predict flat, if not backwards a little bit. That's what I would predict.
Yes.
We're going to grow because we have
things
projects
started
coming
late.
on. Yeah. I'm always I'm the worst, so optimistic all the time. But I plan for the worst case.
Yeah.
But in my head, I'm like, that's fake.
We're going to do way better than that.
Yeah. So, but it's due to a lot of the work that we've done. We have been preparing for a change in the market.
Yes.
So we can sleep good.
Right.
That's it.
Yep.
Bottom line. The market was gonna change at some point. We were saying this for years. This is fake.
Yes. Overinflated.
Yeah.
By some toothpicks. What's happening? How was it being held up by?
Right.
This is not
right. This is when you become a great business. So we'll see.
We're optimistic about it.
We're optimistic. Just kidding. Oh, there it is. The realistic but optimistic take.
There you go.
Yeah. That would be my market prediction for our business.
Yes. And our confidence and our optimism comes from the fact that we have a great team.
Yeah.
Great people. We are all focused on the same things next year.
Yeah.
And so no matter what happens with the market, we're going to do just fine.
Yeah.
That's really why we are comfortable even having this conversation.
100%.
Yeah.
Very audacious.
You know, what we forgot last week was a shout out.
We did forget a shout out. Do you have one?
Oh, you slipped that right in there,
didn't you? I was just wondering if you had one.
I do have one.
I have one too.
Oh, okay.
But go ahead. I don't know if I did it already, so go ahead.
Oh, you have a repeat?
Yeah.
Possibly.
Yeah.
Well, I don't know. The problem is it's like a couple people. Go ahead. You say yours and we'll repeat maybe 2. It's totally fine.
I mean,
game time decision.
I just feel like if I haven't said her name yet, then this is just terrible. This is Steph.
Oh, yes.
Have we said her name yet?
Oh my gosh. Listen, even if we have, this deserves a repeat.
Yeah. So Steph O'Hara is our VP of Sales and Marketing. She's one of the largest reasons why our team has been selling consistently over the last couple of years. You know, she works like crazy. She's an incredible leader, you know, to her people. She's empathetic. She's tough. You know, she drives. You know, she just cares about our success.
Yes.
And
just knows so much.
Yeah, she's just a really thoughtful leader, and she's just helped me a lot handle stuff. You know, she takes care of so much stuff as, you know, vice president. She works. She works really hard. So she's in State College today. She makes periodic trips to different offices, and she's a great cheerleader too.
Yes.
So, but she's not afraid to mix it up. And yeah, she's just so reliable.
I know.
And I appreciate her.
I feel like I could pile on, but that was very good. You pretty much covered everything having to do with Steph.
Steph, she's like a sword.
I know. Yeah, that's a utility weapon.
Yeah. Yeah.
Will she like being called that? We'll see. Probably.
Yeah. Sorry, not sorry. Yeah.
I was actually going to say Marissa as a backtrack to last week since we didn't have one.
Oh, okay.
Our, you know, the person coming up with all of the social media.
Yeah.
Strategy, content, everything with having to do with like a lot of content actually in marketing, because we just have had a lot of increase in eyes and activity. Yeah. And I don't know if we've talked about this before, but our organic social people that come to our website or see and experience us from just our social media that's not paid is like an astronomical number. It's really high for our industry.
I mean, if it's coming from this podcast, it's all Marissa, obviously.
Well, yeah, exactly.
Clearly.
But like all of the traffic that converts to our website that's just free is because of the content strategy that she puts out there. And we just had a real big uptick in our LinkedIn activity, for example.
Interesting.
And, you know, I had mentioned her, you know, because I say a lot.
Yeah.
Like, I'm like, oh, you know what I should do is post more. And
right.
And then you can use, I've posted even less than I ever have. But she overcome my lack of contribution.
Yeah.
Yes. And just still came up with everything and more. And it has helped us even with hiring. Just because of that channel.
Yeah.
Like being focused on the language and understanding, you know, that every social media app is a different channel. You speak differently. You know, people who are going to watch ESPN expect to watch sports.
Yeah.
Go to the cooking channel, you're going to watch cooking. It's the same thing with social media. If you go to LinkedIn, these are the things you're expecting to consume.
Yeah, it makes sense.
And she makes it palatable.
Yeah.
To do that on every channel.
I can tell she's been in this role for how long?
This specific one, I don't know. She's been here for about 3 years.
Yeah, but I can tell, let's just say over the last 18 months, I can tell that there's a rhythm, a voice, a certain, you know, touch to all the stuff.
And that's her.
And I really like it too. Like, I'm not just saying, like, I actually like it because there's a lot. I mean, it's hard when you're a big company.
Yes.
To make
have
it feel
one voice.
Yeah, and make it feel personal.
Yeah.
You know what I mean? And I always like our content. You know, it's something I enjoy. So.
But also, full circle, Steph's in charge of that too. So.
Steph's in charge of it, but Marissa's doing a great job.
Yeah.
So that's it. Okay.
Okay, 2026. Let's go.
All right.
Have a good one.
See ya.